channel my inner Tanner for this opening.
Well, go ahead.
Ladies and gentlemen, welcome to the SoFi Weekly Podcast. Today, we have with us Tanner, Roy,
Hey, everyone.
myself, and a special guest, your favorite. Lucky to have him on the pod, Mr. Steven Fiorello. Welcome, everybody.
Woo! Love it. Good to see you, Steve. You're looking very excited. Tevis, take us away. What are we talking about today?
So today we're going to be talking about some SoFi news. Anthony Noto did an interview on CNBC. Lots to say. We also got updated short numbers for SoFi. A bunch of other news. We're heading into Q2. That's going to be in a couple of weeks. And then whatever else you guys want to talk about that's not SoFi related, other stocks specifically.
Looking at Steve on that one. That's why he's here. He doesn't want to talk about SoFi. Roy, how you doing?
Tanner is my hero.
It's been quite a crazy week. I'm just glad to have power, and
It's been a crazy day, homie.
Yeah, crazy day too. Just this is the first assassination attempt, I believe, since George H.W. Bush in '91. I want to say failed assassination attempt both times. Reagan had one too, but it's been more than 30 years. So hopefully another 30 years goes by before the next one. Somebody said, anyone have call options on DJT? I'm curious what that stock does.
Seriously.
Dude, I just if you were to look at Bitcoin's reaction, it just had like the sharpest, up and down, just based on like within minutes based on the event. And I was like, oh my gosh, like imagine just the market. First of all, I'm glad nobody's hurt. Goes without saying, but imagine
some people were hurt.
Yeah, one person died, one person was hurt, but Trump was just minor injury.
Yeah. It's so crazy how these events can happen, and just I don't know. I was glued to my ex like as it was happening, getting the live updates we were talking about on our group chat. Crazy times we're living in.
It's absolutely nuts, man. I've been following it like you. Unbelievable. I think even Elon Musk, some of his tweets are really eye-opening, calling out for the resignation of the leaders of this Secret Service that were sort of securing that perimeter, as well as fully endorsing Trump after that had happened. And there is something to be said after these really crazy moments whenever Trump, and I don't want to get political, but him standing up right afterwards and showing that he's fine. And now there's even rumors that he might be at the UFC event tonight. That, like, I don't know. That's a good way to recover from someone's worst day of their life.
Do you guys know about, because you're in Canada, I'm sure Steve knows about this, the attempted assassination of Teddy Roosevelt in 1911?
Not off the top of my head, no.
So it's old enough that we won't get, it's politics that old. It's like, who cares? So Roosevelt, he actually became president because McKinley was assassinated. So he, as vice president, became president of the United States. He ran again, was elected, and then he decided that he was done with being a president. He'd go hunt. He endorsed Taft. Taft was a terrible president. Well, really mediocre to bad. And so Roosevelt's like, hey, I'm going to run against you. And he ended up having to do it as a third party. So in October, not sure on the date, in 1911, so this is a month before the election, he started what's called the Bull Moose Party. That was like his symbol and slogan. He literally wrote a bull moose as well. But he stands up there and he's giving this speech, and he has not yet begun. It was very early on, just like this assassination attempt, and someone shot him. And he took out of his pocket this speech that he had, 50-page speech. The bullet went through that. It entered his chest, but it did not enter his heart. because of that thick speech that he had not done. And so he said, "Friends, I have just been shot. The bullet is within me. So I will need to make this speech brief." He spoke for 90 minutes. And his voice, he was bleeding. His voice was getting weaker the whole time. He was brushing off his aides. And he did not win the election. It ended up Woodrow Wilson, I think, our worst president ever, won that. But he was running as a third-party candidate, remember. And he got like 28% of the vote, the highest amount ever for a third-party candidate. These type of events tend to rally folks around a particular candidate. I would be pretty surprised at this point if Donald Trump wasn't reelected or elected again. I don't know if reelection is the right term for him because there's a gap. But I know we're here talking about stocks, but it's just on my mind, and it reminded me very much of Teddy Roosevelt in that moment where he stood up and was saying, fight. And by the way, when he's saying fight, he's not calling for insurrection or violence. Nobody thinks that. People on both sides need to calm down. So
it blows my mind, man, how these events can happen, and instead of everybody, taking it at face value, they still have to politicize it to that extreme degree. Like how the media portrayals of this event is absolutely eye-opening to me.
The CNN thing was crazy.
CNN thing, yeah, for one. The fact that, staged was also trending along with assassination, and it had like 100,000. I mean, last time I checked, it had like 100,000 tweets, and I'm like, the shooter died. I think another part of the audience died. And I'm like, how can you think this is state? Like, it just, I don't know. Yeah, crazy times.
If you're going to stage it, you do it a month before. You don't do it this far in advance.
Yeah, I don't know. I don't believe it was staged at all, but I do think that there was some serious security problems there. That was like, how could that not have been addressed? It was like the closest building to the speech. But yeah, just happy everyone's okay, regardless of political side, whether that was Biden or Trump. That's a terrible stain on the politics that are going on in America. So
and humanity, yeah.
But Steve, you're staying quiet during this political talk. Who are you voting for? Okay, let's move on.
I don't think Steve has said a single word since he came on. Steve, what's up, man?
His head.
He's on mute.
NVIDIA's up.
Oh, there you go.
That's all he wants to talk about. Just so everyone's aware, I'll give you the background on Steve right now. He released an article on NVIDIA. It's trending on Seeking Alpha, and that's all he's here for. So we can give him some time afterwards, or maybe some after hours time, but he needs to talk some SoFi as well. You're in the SoFi Weekly, brother.
Yeah, but you were right all along on NVIDIA.
And so he's been texting me, "You're my hero. You're my hero."
Is that why NVIDIA? Wait, what happened with NVIDIA?
Just
once Steve looks into a company. Go ahead.
Like, I actually really sat down and punched the numbers, and I built some financial models on it. And this thing is, I still can't believe what they built and what it's going to become. I mean, their margins are incredible. Their growth is off the charts. And if the forward revenue projections are even remotely accurate, they're going to get to a $100 billion run rate of profitability in the next 4 years. I mean, it's really crazy. And here's the best part.
You know what's so funny? Roy and Tevis are both sharing a chart. I think it's the exact same one. I'm going to share Roy's because I think it's the same one as yours, Tevis, and he just has it open a little bit better.
And ironically, Tevis shared this with me. So Tevis, you shared this with me. You go ahead and explain it.
No, I just wanted to get the group's thoughts on this. This was by Beth Kindig. She has some great stuff on X. And basically the tweet says, despite an 800% rise since the end of 2022, NVIDIA's forward PE has barely changed over the past year. You can see the forward EPS.
It's not even expensive.
Price. Sorry, go ahead, Steve.
It's not even expensive. It's not even expensive. It's crazy.
Is your mic in front of you,
Like,
by the
we
way?
can break it all down.
Do you have the right mic in front of you?
What do you mean? Do I have the right?
Do you have your Blue Yeti in front of you? Where you're getting cut off on the audio a little bit. Is the mic that you have in front of your face?
Yeah, I heard you. Hold on.
Okay.
Yeah, while he's looking at that, like, this is, a lot of people have wondered and asked me, and I'm not a macro expert at all. I remember the .com bubble, but I was a kid. So, this is indicative. This is the leader of the AI bubble, as people like to call it. If you look at the forward PE, does not look like a bubble to me. It's not a bubble.
Is that better?
Much better.
Much better.
Okay.
Continue.
Yeah, NVIDIA is not even expensive on a PE basis. It's crazy. We can go over it later.
Yeah, and I do think that we absolutely are likely to get into an AI bubble at some point, and there might be some stocks that are a little bit bubbly. NVIDIA, the leader, is not one of those. It's not a bubble. Not yet. It's way, way early. Bubbles usually take years to form. And related, Palantir, also not a bubble.
So just to play devil's advocate, I think on NVIDIA, it's not a bubble when you look at the forward PE staying relatively flat, but the price being so in lockstep with EPS just means that people are pricing in all of the growth ahead. And I mean, we've talked about this on Bootleg, Roy. There will come a point in time within the next 4 to 6 quarters where they're going to be coming across some really, really tough comparables and probably not the same amount of demand that you saw from the very beginning of the boom, essentially, when everybody, like when AI was so new and prevalent and everybody had to get their hands on these NVIDIA products. Now, I can't remember where I read this, but basically it was an article saying that the cost of earning out what these GPUs are, like the amount of money that they're paying NVIDIA, these companies, they need to have a lifetime value that's so long to actually earn out and make it a profitable investment from these companies, that I just think that when you pair all those things together, it's going to come across, a quarter where it doesn't meet expectations or it doesn't have this staggering explosion in the bottom line. And it's going to get absolutely pummeled for that from a stock perspective, even though it's not like in bubble territory from a valuation metrics perspective.
You're muted, Tevis, or Steven. See, what I think is happening...
That's definitely a risk factor.
Go ahead.
We can hear you.
I'm just going to leave and come back in.
Okay.
I think he's having problems with his mic. It's disconnecting. That's why it's changing microphones. That's why it's auto muting him. I think he just has a loose cord. Anyway, so the only thing I'd add to that is I just want to steel man both sides. So one, forward PE is an assumption. So the idea that it's as cheap today as it was previously, hard to know that for sure because these are Wall Street assumptions. But two, on the other hand, the idea that demand, like yes, the premiums are staying where they are, so it's expecting the same level of growth. It might not also be true either because demand could actually pick up. Like, I don't think that the foresight for AI is 100% certain yet, which is the largest chance that we get a bubble is people over anticipating how large of an impact AI will be, but we could also be downplaying it as well. And that's why I think that market caps can get so frothy right now because it's everyone's opinion of where they think that this next technological innovation is going to get to, or what the total addressable market might be. Everything trades around total addressable markets. Everything. And whenever you're seeing one like this that is potentially removing human labor, human judgment, the thoughts are endless, So you get ARK saying freaking they're going to do $950 billion in robotaxi revenue by 2029 because you don't know, like there's zero comps to understand what zero human drivers are going to do for that industry. Anyway. Do we want to jump into SoFi?
Let's do that. Yeah.
Okay.
Just to give the group some context, like I was without power for over 60 hours this week, hit by Hurricane Beryl. No damage to the house or anything, just a ton of limbs that we had to clean up. We had this massive pile that still needs to be picked up, and there's still over 500,000 people without power. So we're grateful to, have the lights on and be able to put food back in our fridge after everything spoiled before. So I've been playing catch up with news. You guys, I guess, can fill me in. I did see the Anthony Noto interview. I saw CPI, and I saw some Powell comments. The stock price was rising pretty well. So is that just it, or is there more to what's going on this week?
That's it. That's it. Chance of rate cuts. Take a look at Open Door as well. Take a look at Upstart. You'll see some of these extreme risk sensitive stocks. Sorry, not risk sensitive, interest rate sensitive positions just skyrocket from CPI talk, from PPI talk. The great Stephen Fiorillo, welcome back.
Hopefully that's better.
Yeah, we can hear you.
You're good, man.
Yeah, my internet was acting up. I don't know why.
No problem. We transitioned a little bit to SoFi. Just really quickly, we want Macro Steve for a second. Why is this stock and other fintechs, for the week, doing extremely well?
Because CPI came in light, it's the lowest amount in the past year, and the Fed is backed into a corner and they have to cut. I mean, I don't think they're cutting on July 30th, even though they should have already been cutting. I think they're most likely going to cut in September, but you're going to see a housing market start to get unlocked. They're going to start to see a loan market get unlocked as the cost of capital becomes lower and people actually really consider taking out new loans or refining or whatever it is. So I think that people are more positive on the Fed actually pivoting. And I think that that's why you saw a little bit of a rally this week.
Do you think that we're actually, well, I guess you kind of said it, but you do believe that there might be a cut in September?
They don't have a choice. I mean, whether they do or they don't, I mean, they should have been cutting already. The biggest, and I've said this the entire time, inverted yield curve is bullshit. Stop looking at it. Anybody who uses the inverted yield curve isn't looking at the real data they should be. Unemployment is the key factor to look at. Whenever unemployment has gone up by 1% since 1948, we've either been in a recession or a recession has immediately followed. We're currently up 0.6% since last June. Now, if it continues on this path, the chances are, I mean, this is an unbeaten track record since 48, a recession is coming quickly. Now, it's inevitable that another recession comes, but I mean, it's around the corner if unemployment keeps coming up. So the Fed needs to cut because that's the other half of their dual mandate is maximum employment. So they don't have a choice at this point. And the data is showing that inflation is easing. So it's even more of a reason. And they need to move away from this 2% thing. It's a fictitious number that somebody said one day and everybody just kind of stuck with the mantra. I mean, it's not relevant. It really isn't.
So how are you playing this? Because as interest rates or interest rate talk is coming in and expected to be getting cut maybe in September, you're seeing fintech stocks, other interest rate sensitive stocks, lenders just skyrocketing right now. And you're buying Nvidia. Is that where you want your
I'm buying a lot.
where's the short-term gains going to come from?
I'm buying a lot of things.
Okay.
Not just Nvidia. But remember, I have a pretty big REIT position, which has been doing extremely well and should do even better as rates get lower. You know, I'm in business development corporations and a lot of other things that should still do well. I mean, there's a lot of things. Look, I think that we're going to see a melt up. I know some people don't want to hear that, but as the cost of capital declines, more businesses will be more inclined to borrow to expand. When that happens, they spend more capital on goods and services, and that means it rolls up to the top, the biggest companies in the market, and the biggest companies in the market generate more revenue, expand margins because inflation's coming down, input costs are decreasing, especially if you see oil stay where it is or even go lower. You're going to see more profits. That means more EPS, more buybacks, more EPS again, and the market melts up. So I think everything's going to do good.
I wonder how long it'll take for markets that favored growth at all costs comes back into favor. I liked whenever those.
I don't know if we get that crazy, but the biggest companies are going to continue to do well. Probably you'll have probably a broadening out of the rally. And I think it's going to be a really good market. I think that we're in a multi-year bull cycle. Even if we see a retracement of 10% or so, that's normal. But I don't think we enter a 2022 cycle for quite some time unless unemployment continues to go up and the Fed is too late on cutting rates. Then I think we could see some problems. Because remember, you need to make it where these companies can refinance debt. Otherwise, the regional banks are going to be in serious trouble. And if we have a banking crisis, that will derail a bull market. So that's something else that the Fed has to really take into consideration. So I think they backed themselves into a corner, and a cut's coming within the next 3 months.
And the interesting thing here is I think that Biden, obviously, like in the polls and everything, is not doing great. One thing that would help him some is if the Federal Reserve does some cuts. It helps everybody, relieves the pressure a little bit. You know, I don't know how much it would help him, but I do, based on the rhetoric that Trump has used, he's not a fan of Powell at all. Somebody mentioned that in the comments, Matt of the North. And Trump wants rate cuts. He wants them now. He wants them yesterday. So that's something that certainly will help SoFi. It's not dependent on that, but it will help. And the other factor, too, that's related to SoFi and Trump is one, you know, Biden has been in favor of student loan forgiveness, and Trump is maybe not 100% opposed to it, but pretty close. So there's a lot of macro things that are, I think, helpful that came out, and CPI is another one of those this week. In favor of SoFi. So, you know, that may be part of the reason why it caught a bid this week. When it up 7.5%, I'll take that any week. It's a lot better than going down into the fives. I still am waiting on my stupid rollover funds. But as I continue to look more and more into SoFi, I know the stock and company well. Like, man, the only realistic fear that I have of price action not being what I think that it might be is if we actually enter a recession. That's uncharted waters for SoFi. We don't know exactly how the company will perform. I think that they'll be okay. I know that they'll be around. They've been very conservative in the way that they're lending, and so I think they're prepared for it. I just don't know how the stock will react.
Sure. Tevis?
Yeah, I mean, with regards to Biden pushing for a rate cut as a political tool for his campaign, I think that ship has largely sailed because the common person is not going to feel the effects of a single 25 basis point, rate cut immediately. And where that pertains to SoFi is that SoFi is going to have tailwinds off the back of rate cuts, but they're going to be 2025 tailwinds. Let's say we have 2 rate cuts by the end of the year. Like, we're not going to see them reflected in SoFi's numbers over the next 2 quarters. We are going to see them in, Q2 2025, let's say, because there's a natural lag between when we see the rate cut being announced and when we actually see it in the financials of the company. And so right now, I mean, we know that the rate cuts are coming. Whether it's August or September or October doesn't really matter in my mind so much as it pertains to SoFi, because in my mind, I've already come to the conclusion, I've already drawn it up that, this has been pushed to being a 2025 catalyst.
Correct. But at the same time, it's psychological. And the sooner that the Fed pivots, it'll create some type of euphoria in the market, and it'll just start a platform for future rate cuts. And then when you start seeing rates get in the mid to low 4%, I think that you're really going to see a lot of refinancing on mortgages and personal debt occur. And that is going to be a big catalyst for SoFi, because they can then reallocate resources. They can go after different types of loans. And maybe by then they'll have business loans up, which they really need to get on. So I think it's going to be good. The Fed needs to start cutting for so many reasons. The amount of debt that we have and the interest that we're paying on the debt is as big as the defense budget. It's crazy. It's absolutely crazy. The longer that they keep rates here, the more they hurt the country and the more that they hurt individuals, because carrying costs on credit card debt, on personal loan debt, on mortgage debt is very high. And that's just money that gets allocated toward financing debt rather than getting spent in the economy. And that's not good.
I want to pivot away slightly from macro and talk to you guys about some of the events that have happened this week around SoFi. So I've heard from multiple people now that SoFi has been working very hard to develop some products. And by the way, the Anthony Noto call on CNBC, I don't think that we've spoken about that either. I'd love to talk to you guys about that. But there's been some talk that they have been prepping some products for release and are not releasing it while rates are high. What do you guys think about the strategy of waiting for rates to come down so then they can couple it with multiple good news to try to boost the stock?
Yeah, I don't know if it's... Go ahead, Steve.
I was just asking, what products are there? Does anybody know?
I didn't say.
Credit card.
Yeah, I think the main one is a new credit card system.
Well, the HELOC.
Sorry?
The HELOC as well.
Well, that's been released.
And level one options. That's the other that they need to
level
really
one
wait
options,
on until
small to mid-sized businesses. However, that's getting some pushback in some of the more the people that go really deep in the numbers for SoFi. I don't think that they're too excited about small to mid-sized businesses, because how do we get into lending whenever we already have so many other product lines that are taking up our capacity already?
Yeah, I don't think that it's necessarily delayed so that it'll boost the stock later. I don't know that that's the purpose. I think it's more that they want, when these products launch, them to be a success. And there tends to be more interest when you launch something when it's new and attractive and different and differentiated. So right now, they're being cautious, and that's understandable. They are uncertain about the macro, and that's really understandable given the last couple of weeks, especially this week. But we'll have to see. I think that going back, and I always like refer things to Palantir, they have in the past, Palantir has launched products before the market was ready for them, and those products did not do well. AIP was something that we talked about before. I know SoFi Weekly, but I think that they had at least a core of that already made before the ChatGPT moment. But you can tell they were ready to hit the ground running much more rapidly than many companies with this AI platform. And they had piloted it with, you can correct me on this, Steve, but I think eight or 10 clients of theirs for a couple of months before they even announced this thing and the AIP con. So, and it worked wildly successfully. And I think SoFi wisely recognizes, like, hey, if it's a great product, but no one is interested in it at this moment, there's no reason to release it. You can wait until the market is actually ready and interested. Release it very well, and then you'll see not just a jump in stock price, but real tangible revenue benefit or account benefit or something along those lines.
Yeah, I think AIP is. Sorry, I think AIP is a good example because Palantir saw a real boost off the back of AIP, riding off that ChatGPT momentum wave, right? For SoFi, let's say we have our first rate cut or maybe our second rate cut towards the end of the year, and they release new innovations for home loans or for student loans, new product offerings, maybe promotional offers, maybe marketing campaigns, something to that effect, riding off the back of those interest rate cuts. Well, all of a sudden you can just bundle those things together and have an even bigger impact than you could initially have on their own. And so I think it's smart. I also think it's smart because at this point, morale and the expectation, like the bar of expectations, is quite low from an innovation perspective specifically. The whole quarter has been relatively quiet from a news front, from an announcements front. I mean, NBA was like the biggest thing that I can remember, and that was back in February. And so when you think about, them releasing stuff, nobody's really pressing a gun to their head to hurry it up, because the last major announcement was I believe it's the level 1 options, and they're like over a year since they initially promised that. My point is they have the luxury of time of when they can release stuff in the year.
It's a terrible thing. Like I hate to think that this is the way markets work, but the older I get, the more I have to realize that is the case, right? That you have to do not momentum trading, but on their side, you have to kind of do with the momentum, post good things into it. Because if you do dump earnings, I always hated this. I was always anti the idea of like posting great earnings after like a bad CPI or something like this, so then your stock doesn't see any movement. But it's true. Like honestly, if you post good earnings and it's followed by or followed in front of bad news, then the stock will deem it worthless until it gets realized later in the financials. I don't know why I said it like that. Financials. Like the voting machine will think of your stock very poorly versus the weighing machine that you're going to have to wait for so much later down the line. So I do think that they are kind of holding on to some things. And who knows? Credit cards might be one of them. I don't know if you guys saw the call with me and Tim Sweeney, but he brought up a good point. They just posted about offering 0% APR transfers for credit cards so people can bring their balances over, and 15 months from now, they're going to restart payments. What happens 15 months from now? Like, that'll be right in line with 2026 expectations for earnings, which they'll potentially boost those credit cards into personal loans. I don't think that they're not thinking of that.
Oh yeah, no, they have if you want to assure outcomes, you need to line up incentives with that. And SoFi's leadership's incentive is to boost the stock price by the end. Is it the end of 2026, or what? Where's the date? End of
2026 is for the 80-cent EPS.
Oh, I'm thinking about the leadership incentives. That's June 2026.
Gotcha.
And they are releasing, this is a little announcement that I've not had time to dig into, but these are not dead. If you throw this up on the screen, Galileo continues to launch new products and innovate. And this isn't like groundbreaking, but they've launched a wire service transfer capability. So now people that are using Galileo can utilize that. Another function of being that they quoted themselves again, the one-stop shop in finance. So it's not like they're sitting still. It feels like that. If it very much feels like that. But I understand that the macro is not where you want it to be with some of the products that they may want to release. And so it makes sense to wait.
I have a suggestion for leadership at SoFi. Have Derek White on the earnings call and have him go through Galileo and Technesis and the full platform for about 3 to 5 minutes every earnings call from here out forward, and have him echo what Noto says and take a deeper dive and get people really understanding how important that business line is going to be.
Yeah, Steve, like I mean, I would love that as well. I don't think it can hurt at this point, but I'm just really skeptical because of the people who are on those earnings calls. The analysts, they're just like Patagonia vest finance bros that understand nothing unless it hits the actual bottom line of the company. And so they're like, oh, Galileo can solve cancer for all we care. If it doesn't make money, we're not going to, log it into our models. And, it's very skewed towards the financials. If it does make money, they're not going to be like trying to break it out rivet by rivet to understand how it actually makes money. They'd be like, okay, it makes money.
You don't lose anything by doing it, though. There's no time limit on an earnings call. They can have them on for 3 to 5 minutes an earnings call to start getting everybody up to speed on it. And it just becomes one more vertical that people are talking about. And it ingrains it into their mind after several earnings calls.
It's not a bad idea.
We talked about this maybe a month ago or so, and I completely agree. But let me for just a minute be not as Tevis would say, the devil's advocate. This is SoFi Weekly, so David Cavarini advocate, the bear advocate. And Galileo, has retained Derek White as CEO. They've retained that title for him. He's not been in these type of conferences or earnings calls with SoFi in the past. And I've had some people say, like, this is actually a good thing for SoFi because you do not want your competitors with SoFi in some fintech area, thinking of Galileo actively as, oh, it's just SoFi with another label on it, because they would maybe perhaps be hesitant towards embracing Galileo. Do you think that there's some credibility towards that, or not?
No.
All right, fair enough.
That's funny. There was also news, speaking of Derek White, Galileo put out that they had released wire transfer APIs, which a lot of people, Tevis?
Roy just mentioned this 5 minutes ago. You were looking at comments.
I must have been. Anyway, it's freaking huge. It's so much bigger than people are giving it credit for. And it's not fake news like Captain Crunch says. Galileo is not fake news.
No, for real. Like I've been, this is not my industry, but I spent when Robinhood announced their credit card product. I looked into Galileo is not exactly banking as a service, but there's a lot of overlap there. And I looked into Galileo. I looked into a lot of the other competitors that are in the space. And I'm not, again, an expert here. I'm just a fellow investor. But, I mean, they look like...
Hold on. Why is there a bear in the chat? that cannot be the real.
It is the real one. Yeah.
No, it's not. Stop it.
It is. He's verified.
The way you summon him is you mention his name 3 times, and then he appears in chat. So, sorry.
Yeah, my bad. But
can we
sorry,
talk about this? Whenever we're done this, I'd love to spend some time on the CNBC interview because there's a lot of interesting topics we can pick apart there. But Roy,
pull it up.
But let's let Roy finish the.
That's all I had to say on that. So
it's going to take me a while anyway. You can finish up. If we're not though, George brings up a good point. What do you guys think about the credit card offering 0% APRs? I'm kind of mixed on it, personally, because the credit cards, they've been obviously losing a lot of money. It's a big money loser for their business currently. So offering this means that they are extremely confident, but who knows?
I mean, look, I trust management. So if they feel that this is something to do, then I can't knock it, but I would be more focused on the business segment, business banking accounts, checking savings, business lending, full business platform. I mean, that's an asset management. And I think that those are the keys at this point.
I think at most banks, credit cards are their biggest winners. Like, it's crazy how profitable credit cards are if SoFi can get it right. So I actually think this is massive.
If they can get it right, but on a lot of things. I mean, I have credit cards with financials, or a credit card. I only have one, but I have a credit card that is with a financial institution that I have no other accounts with. So, I mean, I don't know. The whole idea is to get. What are you laughing at, Tevis? Why did Tevis go off screen?
I'm gonna read the comments, but you continue.
Okay. I just think that the whole credit card thing isn't the vertical to get people to utilize other products. So if they're going to be generating revenue from it, great. But we really want to grow the business side of this business and the asset management side of this business.
Yeah.
Yeah,
I think
so
we'll
fun.
get there, but
the Noto from Timu comment cracked me up. Just on the credit card aspect specifically. Look, we know from the last earnings call that they promised more credit card innovation was going to come towards the back half of the year. We're technically now in Q3. And so this to me struck me more of a marketing promotion than anything else, in anticipation of whatever new innovation they have in the credit card offering. Like if they come out next week or next month to say, hey, here's a new thing, new product offering within the credit card world that you can do, then it's going to have a combined effect to bring more people in the door. And so I do think it's in relation to what they have upcoming for credit cards that's going to be announced shortly. And it's a full push, like Tanner was saying, like it, when done right, it has the potential to be very profitable. And right now, this is one of the weakest links for SoFi. It's hurting their profitability. And so if they can turn that around, then I'm all for that.
I want to show you guys a chart that I had. So SoFi doesn't share these numbers directly. But if you listen to Chris Lapointe during his earnings call, they do bring up debit interchange volumes for obviously the debit card that comes with SoFi Money, the checking and savings account. And if you just take his comments and then just reverse the numbers, so then you can see, you know, based on the year over year growth, what, wait, how do I make this smaller? The whole ratio changed once I changed the thing. So if you look at this, they are now doing $1.9 billion in debit spend in just the last quarter, which means if you divide that out by each SoFi Money account, the amount of money that people are spending through SoFi Money is increasing at great rates on a per user basis, which immediately shows you that SoFi Plus is working. Lifetime value per client is absolutely working. And if they can change these debit interchange volumes to credit interchange volumes, you essentially 6x the earnings just based on what they're spending. Okay. Then you just need to figure out how to lower the defaults and continue making those APRs, and they are going to get very, very rich. But currently that is not the case.
Well, at least in the short term, this will absolutely lower default, you know, if it's embraced. And I don't see a reason why it wouldn't. Like, this is actually, to be honest, this is my first time hearing about it. Though they have done this in the past. I don't know if it was with the $200 bonus or not. But it was a very different environment. Rates were not this high. Tim Sweeney, you know, talked about offering several different tiers of credit cards, including the appeal of offering a card that had lower, I don't think he had 0% in mind, but offering a lower interest rate on a card, which in turn leads to more repayment and less defaults because you're not trying to chase some like 29.99% ridiculous APR. So in the short term, like there'll be, you know, repayments, but it's at 0%. So like that's something that people will be able to do. But you know, like 15 months from now, maybe I'm actually really curious, like if they're doing this because they're that confident that the macro will be pretty good by that point, or if this is really just a 2026 play or what. But I have a little bit of concern. I mean, $200 cash bonus is pretty substantial. 0% APR, they're going to get the APR, the interchange fees, but it's there's a risk here. Like this is
People
maybe not
default
as
on
risky as
0%.
Robinhood's credit card with the 3% cash back, but an unlimited 2% cash back, no annual fee, 0% APR for 15 months, and a cash bonus. There's risk.
Definite expense to it as well along the way. It puts them further in the J curve or in the negatives, but hopefully coming out of that positive. Obviously, like us looking at the numbers, it's very hard to see because every time that we look at loans or we look at credit cards or anything like this, we see the loans as one big basket. Okay. They are not looking at the company this way. They try different strategies, market to different people of different FICOs, different incomes, and they all group them into different cohorts and see how each individual cohort is performing on its own. So clearly, they are seeing things within credit cards, they're seeing things within personal loans that can make them more efficient at marketing to certain targets. That's what's happening here. It's just, are they going to get things right? Are they going to overinvest in certain areas? I think SoFi historically has shown us that they have been pretty conservative on going after moonshot ideas. Usually the things that they take shots at are pretty freaking surefire ideas. And I'm looking forward, like honestly, I'm getting ready for earnings predictions and everything coming up. I am blown away by the expectation of getting 75% growth on financial services this year. Like it's a massive, massive target. So either they blow away member growth way higher than I thought they were going to, or they blow away the per dollar, increase on spend, increase of revenue per financial institution product that they have. And that could be through credit cards. Like I'm not sure, but 75% growth is going to be a very hard target in my opinion. Let alone them beating that target.
That's 75% minimum. That's a floor, not a ceiling.
Well, I don't think that you can say it's a minimum, but yeah, I expect it to be a minimum.
They've said it's a minimum.
Yeah, but companies can miss. Like I wouldn't call it a minimum. I wouldn't call it a max either, but like
I'd call it a minimum when they've never missed, a promise to date.
I don't know. I can't even work out the numbers in my head. Like I think that SoFi money accounts might actually end up continuing at the growth that we saw last quarter, and then that brings us somewhere close to where they're expecting, or a ton of growth in credit cards and SoFi money. And if that's the case, I think that like there's a slide from Block that I want to show you guys. I think I've shown you it before, but it's the number of inflows that happen per product line that they have. So do you guys know the one that I'm talking about? They show off the amount of money that someone brings onto the platform, whether they're just using it for peer-to-peer transfers, for stock trading, for if you have a Cash App card, all of these different things.
That's the company that Jack Dorsey's a CEO of?
Correct.
Not familiar.
Yeah. So let me bring up this slide because it's unbelievable. This is going to be, I think I even tweeted about this. This will be the biggest rush in fintech, will be this user right here. The direct deposit user. Whether you are using any other service, nothing brings more money to a platform than direct deposit. This is why PayPal's talking about it. This is why Affirm is now talking about getting direct deposit users. Affirm is talking about getting direct deposit users. PayPal, Nubank, SoFi, Hood, they're all talking about it. This is going to be the next capture. And if SoFi is focusing on that rather than level one options or another product that people want but don't necessarily, see as great of a benefit, I mean, this will be SoFi's success story.
Yeah, this is the golden grail of assets under custody is the direct deposit. It's better than any form of revenue for this type of company. Robinhood, I know, is one that we've talked about before, and three of us own Robinhood, but they've grown AUK considerably, but it's not the same as direct deposit. Like you cannot. That's apples and oranges. And so, yeah, I absolutely agree. Like that is they're killing it. They're growing in members. We'll have to see how they do this next quarter, but yeah, that's an interesting chart. Not bad.
Yeah, I don't know if there's any other slides, but I honestly suggest people who are really interested not only in SoFi but in Nubank, in all of these other fun fintech companies. Although you might not be interested in Cash App, they do talk about the overall market a lot and give you some great insights into why I think that this industry is a fun one.
And let me just go back to Tevis's comments on it being, the likelihood of a miss or not. SoFi is pretty reliable in that, but it's a newer company, and it's not yet, I think, at the point where we can say that that's for sure going to happen. Something can shift in the macro. They could have a product launch that goes horribly, like this credit card thing. It could cause actually a miss down the road in a few quarters. Not likely, but it could. Salesforce is maybe what you're thinking.
I was just searching that. I was going to find what the streak was.
Yeah, it's ridiculously long. Like Salesforce, you can pretty much just bank and just say, yeah, they're going to hit it. It's over a decade, I believe, of their streak of not missing at all. Once we have SoFi getting to like 5, 6, 7 years, that's when I think the market and investors really look at guidance as being worth its weight in gold. But we can also see it not being taken seriously by analysts. We can see that based on price action as well, despite how earnings go and how guidance is. It just does not have that level of reputation yet. But I think that this company could. There's just more risk to it. It's not guaranteed. It's even if it's very likely.
Sorry, I'm reading through an old article on Salesforce. It was a very long time that they have never missed revenue guidance, and then, one time they did, and that was about a month ago. Any other pieces of news? Tevis, do you have the short report stuff?
So no, I don't want to talk about that.
Interview.
The last thing that I want to talk about was on that CNBC interview, which I think we all saw, except for maybe Roy. But you're definitely not.
Sorry.
What?
I think I saw all of it. I may have missed a piece, but I saw several different. Yeah, it was like it was close to 10 minutes.
Yeah, exactly. Close to 10 minutes. He covered all the major points. He talked about student loans, home loans. He talked about the rate cuts and the guidance. He was asked about AI. But I think the clip that everybody took away was the very end when he was basically asked about his political views. Or I shouldn't say that. He was asked about the politics around stock performance. And let's listen.
Your results?
Yeah, there's a whole spectrum of technologies that we use because this is a financial show and we operate in a financial world. People want to talk about interest rates and consumer spending. We don't spend a ton of time talking about the product, but we are a product company, and my vision for the product is that you open up Sofi today and you go to your member home.
It's a good part.
30 seconds. Yeah, there you go.
The conversation about the presidential election is front and center here in Sun Valley. What outcome do you think would be best for the economy and for your business in particular?
Well, I'll make an analogy. I went to West Point and I played football, and I want Navy to win 364 days of the year. But on that one day when they play Army, I want Army to win. And so I'd be lying to you and being, less than disingenuous if I didn't say our business would benefit from a Republican administration. There's more capital markets activity. There's more M&A activity. I want our country to be very strong and vibrant. And then one particular day, I'll be rooting for one particular party.
So on that, I think there's a couple of interesting backdrops. Anthony Noto has been known to be historically left-leaning. back in his Twitter days and such. And so that comes as an interesting pivot. He didn't necessarily come out and say, hey, I'm supporting XYZ candidate. He said, we would benefit more with this type of administration, more capital market activity, more M&A activity in general. I don't know if we read between the lines there or if that's something, specifically that they're looking at. How I took it was, and I was having back and forths with this with people on Twitter, where they're basically saying he's alienating people, similar to how Musk alienates people by sharing his political views, and then he loses potential buyers of his products because they can't disassociate the person from the product. I, on the other hand, took it in the sense that, if the Fed were to cut rates 4 times this year, that would be more beneficial for SoFi's business as opposed to if they do 0 cuts this year. And if we were to have a certain administration, it would be more favorable for SoFi as opposed to an administration that actively tries to stifle them from a student loan perspective. So I don't know. I'm curious to get everybody's thoughts.
Do you, what company do you bank with, Tevis?
Don't answer that.
Okay. You have the name in your head?
Yes.
Do you know the name of the CEO of the company?
No.
How many people at SoFi know that Anthony Noto is running it other than the people that are interested in the stock?
Well, I mean, the stock is the thing that everybody's trying to make go up, including Anthony Noto.
Yeah, but you're saying buy the product. I mean, I don't think that institutions are going to worry about Anthony Noto's. I think that people are going to base the stock whether they're successful or not. And they're not going to go up or down based on if, like no one is going to choose whether to put direct deposit with SoFi, yes or no, whether he even said Trump 2024. And he didn't even say that. He's saying,
all right, so let's reframe. Will he lose supporters on an investment point? But like, I'm in the same camp as you are. I don't think it's going to be a huge deal. I'm just trying to present a counter argument to the critiques, even if it is from an investment
markets. The second you talk about capital markets, you're already leaning more Republican than Democrat. Like you're talking about I don't know. I don't think that many people looked too much into that comment, especially by the fact that he said, 364 days out of the year he's leaning one way. But it's hard for him to vote for the guy that's taking away his largest business, student loans and continuously putting out products that are direct shots at SoFi. I think that it'd be crazy for anyone to think that that's the team that he's rooting for.
Steve, what are your thoughts?
I wish every CEO of every company I invested in would just take the Michael Jordan approach. I really do. Everybody is entitled to their own opinion. Everybody can vote however they want to vote. But there's no reason to discuss it. If you are the CEO of a company, there's no reason to alienate anybody. And Jordan had the best approach to it. I just think a lot of people can learn from that.
And people, there is a clear benefit to one of the candidates. We've already talked about it, winning versus the other for SoFi, and thus for Anthony Noto. But people do not always vote based on their pocketbooks. There are things for some, sometimes for many, especially those that are very wealthy, that matter more to them, and that's fine. Like I'll give an example. Are you guys familiar with the permanent fund dividend that Alaska has?
Sorry, I missed that last part, Roy.
Are you guys familiar with Alaska's permanent fund dividend program? So I was born and raised in Alaska, and they have this program based on oil revenues, reinvestment in the stock market, bonds, real estate, a variety of things. They take they inflation proof it, then they take the average yield over 5 years, the profits beyond inflation proofing the fund, and divide that amount by every Alaskan resident and send out that check every single year. Doesn't matter whether you are less than a year all the way up to whatever age. And you have to be up there a certain amount of time. So don't get any ideas if somebody's like, hey, good for you, Bay Ray. I should message you on that at some point, figure out where you're at. But When I was 18 or 19, voting for the first time or one of the first times, there was a vote that was raised where people were, instead of doing this annually, which many families were relying on, they said, why don't we break up this fund? Private individuals can invest more aptly than the government can. I absolutely agree with that. Even back then, I agreed with that, although it was very different back then. My problem was, so I was looking at this as, actually, I think I was 20. Anyway, I was about to get married, and I was like, hey, if my wife and I both get this, we're going to get a one-time cash infusion of between $40,000 and $45,000. And this is back in like 2000, 2001, something like that. So there's a lot of money, ridiculous amount for us. That was a year's income, just coming out of college. So ended up that I voted no. Now, even though it was not in my financial interest to do that, even though I knew I was moving from Alaska and I would no longer get this benefit, the reason why is I was blessed with very good parents that let me have those funds. I mean, we'd go on family trips, we would buy land with it, but some of those funds would hit my bank account. And when I was older, my parents helped me invest those into the market. But I had friends that did not see a penny ever, that their parents would take it and go on expensive trips just by themselves, leaving the kids behind. They would buy nice things for themselves and let some of my friends basically almost starve to death. And I realized that many people that I still knew that were in high school that could not vote for this, they would see this one-time cash infusion. It'd go to their parents and they would never see a penny the rest of their lives. And so I voted no on that basis. Now, I think Anthony Noto is the same way, that to him, his principles, which are different than mine, matter more to him than money. Like, he has a lot of money. Yes, having more money, that's a great thing. That's awesome. But there's a point where your needs are met and even above your needs are met. And then money stops mattering quite as significantly. There's other things that matter more.
Do you think that the business cares about the money?
Yes.
And I think that he cares about the business.
Yeah. Well, yeah. I don't think it's necessarily like that he hates the idea of who he doesn't enjoy being in office. He realizes what it's going to do for SoFi's bottom line and that it is helpful. But
that's all I think it is.
At the same time, he has a clear preference, and that's fine.
I think B-Dubs was the one that called it out. Like, he was asked the question point blank. What did he think? I get Steve's approach, like the whole Michael Jordan, Republicans buy sneakers too, and he's staying politically neutral throughout the entire career. But Michael Jordan got just as much heat for that as he would have if he picked a lane. And
Sure.
like the point is you're going to get backlash regardless of what you do. Doing nothing will result in an equal amount of backlash, maybe even more backlash, because it's from both sides rather than picking a lane. And I think that, my first gut reaction when I heard that was it came at a time when I think the political climate is more accepting of that than it was maybe 2 years ago. And it came off as pretty honest and pretty genuine. And I think that it did more good than it did harm, because he didn't say, hey, I personally, want this person to win. He just said, hey, the business is going to do better in this administration. And like, I think that's a more muted type of support than if he was wearing like a fucking MAGA hat in the interview, Yeah.
And I think that is as simple as you need to make it. Like taxes on SoFi are going to be lower under Trump because he's already been in office for 4 years and that's what he did. Like, I don't know. It's not too much. He's not making a political stance, more of just, hey, what's better for the business? And I don't think that many people would say that is, the wrong way to look at it. What else was there in the news before we wrap up this show? We had the Galileo wire transfer stuff. Tim Sweeney this week shared some of his thoughts on SoFi. I thought that was a great chat. Anthony Noto on CNBC. Trump having an assassination attempt. Geez, that was by far the biggest news. I don't know what else.
I think that's it. I mean, we're entering a silent period. Like, this is more than I expected this week, especially the CNBC interview. Again, I had lost power, so I don't know if this interview is expected. I don't think they normally advertise those in advance. But it wouldn't surprise me if we hear basically nothing between now and earnings, other than maybe well, actually, Galileo's already had their announcement this month, so that's probably it until earnings.
Do you guys want to do earnings predictions next week?
Let's decide offline.
Why?
I'm not sure. I got to check the dates.
Yeah.
It's either going to be next week or 2 weeks from now. But I think we can wrap there. We can do it after hours. I'm just opening up the UFC fight night because I want to see if Trump speaks.
If he's there, that's crazy.
I think he was going to be there. So,
ladies and gentlemen, for the members in the chat, make sure you guys come check out the SoFi Weekly After Hours show. We're going to be posting it tomorrow around noon. Sometimes I'm too late. I post a little bit later. Tevis is on my ass for doing so. But until then, I mean, we're probably going to be talking Tesla and Nvidia. It's the only thing on Steven's mind. So we're going to get to that. Everyone, thank you so much for watching. Appreciate your time. But bye for now.